Hi, Charles Cannon, Certified Financial Planner here for the Lifetime Income for You channel. Emergency video today. Fitch has downgraded U.S. credit from AAA to AA. What does that mean? Well, it means that they are losing their faith in our ability to repay because U.S. debt is issued on the full faith and credit of the United States, and we're at $32.6 trillion. If you've been in my webinars, you know that hundreds of millions of dollars of that deficit is being refinanced every single day at current higher interest rates. And our interest rate or our debt service next year goes from 600 billion to almost $1 trillion, a 40% raise in just 1 year because of the rising interest rates. Fitch said directly that it reflects the fiscal deterioration caused by our heavy debt burden. That's their direct quote. Those of you out there who have been telling me, hey, I don't want to do anything right now because I really think we're going to have a soft landing. What are you basing that opinion on, folks? Because there is no macro indicator that tells us a soft landing is coming. Even Fitch today said that they expect recession in the fourth quarter. Take a look at what we're at. Our PE ratios are in the 31 area. If we get back another 5 to 7%, which takes us to our November of 2021 levels, that'll be 34-ish. If we get another 5, 7, or 10%, we'll be 39 or 40 on PE ratios. That is approaching our levels just before the Y2K recession. Every one of you was on my webinar and you remembered what happened in April of 2000, right? You said it. The bubble burst. The bubble burst. And that's what we've got right now. With no macroeconomic indicators telling us there's a reason for the markets to go up, we're creating a bubble for ourselves, folks. You are the first generation to retire with high 6-figure and 7-figure IRAs, and you have to be good stewards of those. You've won your game because you've been able to retire with $1 million or more in your IRA. And if you are still fully invested, what are you seeing that the experts are not seeing? What are you seeing that the experts are not seeing? Because we've got a ton of financial storms off our coast right now. And in Florida, when they have a storm off the coast, what do? They board up. And the places that don't board up spend the next 5 years cleaning up. Do you have 5 years to clean up? Because if you're 65, 70, 75 years old right now, do you want to spend the next 5 years waiting for your portfolio to bounce back? You've got to be a good steward, leading to a healthy retirement, leading to the legacy that you want to leave, perhaps the multi-generational wealth that you hope to leave. All of those things are incumbent upon you being a good steward today. And if you think that we're going to get right back to our 2021 highs and build beyond that when we're in tightening mode, how is it possible for the earnings to keep up with the rising stock prices, folks? It's not. It's just not. So you're living in fantasy land if you think that's what's going to happen. So buy your ticket to Disney World today. Go on the It's a Small World ride, because your portfolio is in trouble if you don't pay attention to it now and get control of it now. I mean, this is a major thing when a ratings agency downgrades the entire American economical system. And you've got to take today's warning shot of 1.5% drops in the market that went with that ratings agency downgrade. That's a shot across the bow. Take it seriously, folks. I challenge you to be a good steward of your portfolio. Do not put this off. I know it's summer and there's other things to do, But if you get into the fall and you wait until we're in full on recession, then you're going to be in trouble, and you're going to be one of the people who's spending 5 years cleaning up. Tomorrow, I am going to post on Facebook only some insight about Chairman Powell and what he's doing. So follow us on Facebook so that you get that second video, because I had about a 10-minute video going today. I've split them in half, and this part about Chairman Powell, it is gold, folks. Follow us on Facebook. I want you to push the button below and get on my schedule. Things are happening in the market starting today that we've been talking about for months now. And I believe that this Fitch downgrade is going to be the start of the crumbling of the market back down to levels on the PE ratios that are in the 20s, maybe into the teens. I want you to remember that in 00 and 08, we got into single digits in the PE ratios before we had meaningful rises. But back then, we had economic expansion because they put money in the market and they lowered interest rates, and we can't do that right now because of inflation. That's all going to be part of tomorrow's video, so make sure you follow us on Facebook. But number one thing to do is click below here, get on my schedule, and let us lead you to safety so that you are a good steward of your portfolio, your retirement income, your legacy, and your multi-generational wealth. For the Lifetime Income for You channel, I am Charles Cannon, Certified Financial Planner. Remember, lifetime income for you is the most important part of your retirement.